Hello traders, welcome to KineFX Academy YouTube channel. My name is Akinola Kine, I'm the lead instructor. So guys, here is just simple way I want to just explain something in trading, you understand, and how to make money trading. This is how an easy way to do that. In forex, we said we buy one currency against other and we sell one currency to buy the other one. The forex is being traded in pairs, like one currency has to versus another currency. But there is this technical analysis just to analyze which pair which currency do you think is going to win the other pair, you understand? But there is this simple way you can use to make sure your prediction is right, you understand? That is what make trading different from gambling, you understand? So in gambling it's 50-50, it's either you lose or you win. But in trading, if your analysis is right, you have a chance to win, and you will know if you are going to win in the market. So if you know how to take care of your management, your risk management, and how not to offer leverage, you understand. So you know, in forex trading, the way the market behaviors appear to us is in this movement. You understand? There are three movements markets move: the impulse move, retest, impulse move, retest, impulse move, retest. That is uptrend, and this is downtrend. When the market is selling, this is when the market is buying, and when the market is selling, we see something like this: the impulse move, retest, the impulse move, retest, the impulse move, retest. When the market is selling, don't mind my drawing, you should understand what I actually mean. You understand? So these two way, let's first stay in these two way. You understand? So when the market is buying, is form I. Let's assume this is I. It's form I, which we represent by H. And when market is retesting, like this retracement at this level, it form I low. That is I low. You understand? So when the market form a new high, that is when it form II. That is, the market is buying, going high. That is II. You understand? So that is II, and the retracement of that too is this low I again, higher low. You understand? So that is that on a uptrend. Market form I low, I low, then I again, I low, until the trend change. So same thing on when the market is in downtrend, it form a low, market form a low, which is L. Then at the end of the retracement, it forms low I, LH. When something is going up, that is what we represent by I. And when something is going down, that's what we represent by low. You understand? So when the market is going up on uptrend, we said I, and it formed a new higher low. That is the retracement. That is, the low is for this I. So now when the market is going down, that is, the market is going low. So higher low, like low is form a low that is going down, then retracement which goes up means low high, then a new low means low low. You understand? A new low means low low. That is, sorry. low. So and here again is also low high. Here is also low high. That is market movement. You understand? This is market movement, uptrend and downtrend. This is uptrend. Market is going up, and this is downtrend. Downtrend. The market is going down. So how do we make use of these two analysis after confirming that one market is in uptrend? If you know, if you see that a market is in uptrend, that is, like assuming this is Euro CHF, this means that the USD is overpowering the Swiss francs. You understand? Is overpowering the CAA share, which means Euro is stronger than the other currency, is safe to buy. You understand? You will make money if you buy than selling. And if you see market like this, that means the other currency is stronger than the base currency. You understand? So the post currency is stronger than the base currency. So you just have to sell just to follow the trend. You understand? So in this scenario, how do you sell? So you have known that the market has formed a high, this high that I indicate, and you have seen a higher low, and it's formed a new high, and it's formed a higher low. So to me, there's different way I used to dictate the trend is going to continue. First of all, I will first target this level. There is two way I used to find the end of this retracement. That is this higher low, where it's going to end and when it's going to continue. First of all, I used to pick this. I used to consider this as a minor resistance. You understand, which got broken. So I expect price to come back to this resistance that got broken. When the price come back here, I'll be finding a rejection candle at this level just to continue buying. You understand? So with that, you will make profit. You can target here. If you can find your entry here and you succeed that, just target here as your TP1. I don't know if you can continue it targeting TP2, but here should be your TP1. That is, if this particular trend is going to continue, this level is going to break. There is no way this trend will continue without breaking this level. So what you're after is how to know when this retracement is going to end. You understand? That is another way to consider the end of retracement. Sometimes the retracement don't get to this resistance level. So another way I used to use is this Fibonacci tools. You understand? Fibonacci retracement. After placing my Fibonacci retracement as a swing low to the swing high, so I will know that when a trend is strong and it's going to continue, you understand? So the possible level for the retracement to end is the level 0.3 and level 0.5 if the trend is actually strong, like very strong. Then I will just put my box here, this a rectangle box there. So I will delete the Fibonacci. Then I'll be waiting for market to come back to that region. So once I see that the market enter that region, then I will. Sometimes it's used to match with the previous analysis. You understand? Then you will see that sometimes it's used to match. Yes, I've seen that several times. So, but another way, you understand, is drawing a trend line. You understand? So when a trend line, but the trend line has to pick one and two, then you enter for the third one. But actually, I don't usually use trend line. The third way I used to use is this eye level. So I'll be waiting for the breakout of this eye. You know, as I see the market forming high low, forming a new high, then retracement. I'll be waiting for market to break this high again. So once I see the breakout of this high, I will know that the market is going to continue. And take note of something. You have to confirm that on higher time frame, not lower time frame. There is a lot of fake out on lower time frame. So once you confirm a breakout of this high, that the price continue, you understand what I'm saying? That you see that after the end of this retracement, you see something like this, that the price just break the high here, the high here, the price just break it up. Once you see a candle close above the breakout, then you are good to find your entry for buy. But in that scenario, I don't I like targeting like 1:2 or 1:3 unless I see a level at my left hand to predict the possible level the price is going to get to. And what I'm explaining since morning also applicable to downtrend. Once you see a low and you see a low high, let me delete this so that you don't get confused. And you see a low high, then a new low, then you see the retracement of that low high. So you just predict possible level like this is the initial support level, which is the low that got broken. So it's possible price, sorry, so it's possible price come back to this region before it continue movement. Or another second way I explain, which is the Fibonacci tools. So just bring out your Fibonacci retracement tools, then place it on this the swing high to the low. Yes, which is the you just pick the 0.3 and the 0.5, which is this level. Bring out the rectangle tools, then put the box here. Make sure you cover the two. Then be waiting for a retracement to get into that channel. Then continue. We find your any candle of your reversal candle. It can be spiny top. It can be shooting star. So you may not use spiny top because sometimes spiny top is an indecision candle or candle engulfing. You understand? So any candle is good you like using for your rejection candle like reversal candle, sorry. So and the third way which I explained on the uptrend, same thing applicable for downtrend, that the breakout of the low low. So once you see any breakout of the low low here, you enter for sell immediately. That is what make up of market and that is how we can trade the market. The third way the market used to move is in zigzag manner and there is always something causing that. Every movement on the market is caused by news. I want you to take note of that. This is the other way around the market used to move. The market is consolidating, moving in a zigzag manner. So there is also two ways to trade this market when you see market like this. First of all, if you want to take it with pure price action, I will teach you. And if you want to take it and trade it with indicators, Bollinger Band is the best for markets like this. Bollinger Band is the very best. The first one is trading the support and resistance level. This is the resistance level. You understand? So, and this is the support level. You understand? Let me write that out. So, this is the resistance level. Also, this is the support level. So, before you confirm that this support and resistance is valid, make sure price has tested it more than two times, like one here, 2 year and 1 year, 2 year. Confirm that, then you make your sell at the third touching and you make your buy at the third touching. So the safest way, I don't if you can check, I'll drop a video on the best way to trade it because sometimes there's always a pivot point between this support and resistance. There must be a level at this center that price used to test it and go back, test a break, retest. So that level it should be your target anytime you are trading support and resistance level. And when you are putting your stop loss, it should not more than few pips below the lowest low when you are buying, and a few pips below the higher high when you are selling. So all what we have been explaining since, let's check everything on the chart. So you can see it's very clear here. That is market movement. You can see what happened here. This is an impulse move. Sorry, this is an impulse move, retracement, then another high before the market got broken. You understand? That is just a counter trend because the general trend of this particular market is downtrend. If you look it very well, it's downtrend. If you look it, let's check it like this. That's sorry. Let's start from here. So this is low, this is low high, this is low, this is another low high, this is a new low, this is a low high, low, low high, low. There is something happened here. This is a low. So the retracement don't suppose to get to break this level if this trend is going to continue. But what happen when the retracement break it, the trend don't continue instantly. There's something happen. So there may be one news that affect the trend like that. So that's why I said everything appearing on the chart, we should use candlestick to analyze what behind the movement is the news and effect. So effect that happen that control the market. We can see that the market formed double top, then it continued the downtrend, a new low high, a new low, then low high. So you can also see a same thing repeat itself, form double top, then still continue, and this price started consolidating. You can see that it started consolidating and the trend has failed. You can see consolidating, price has been coming to this region, then coming to this region. So that is just way how to analyze market. This is level I'm talking about. You can see this particular level. You can see this particular level that price tested it. So these are the level you'll be targeting when you want to make use of support and resistance trading. These are the targets these are the levels you'll be targeting. Stop by 40 points because price has been using it as a support and resistance for a while. You understand? That is, this happen in all markets, including derivative crypto. That is market movement. You can see this is uptrend. You can see this is uptrend. You can see an impulse move retest, impulse move retest, impulse move retest, impulse move, and it happens here that the retracement break the initial higher low. It break the initial higher low, though the trend later continue, but it doesn't break the high which is here. So before the trend change. So once you see this in the market that the initial low market has break it, you should know that something is about to happen. So the sellers also trying to get chance in the market, which you have to try to, if you buy very early, as in you buy at this level, when you see something like this happening, you should try to assist your trade because it's the trend is getting weak. You understand? So that is what just mean the trend is getting weak. You can see how this form a double top, then immediately the trend change. So you will have known from this place when this the low high at here got broken here, when the retracement of this particular high break it here, you should know that something is happening, and there's a pattern called head and shoulder, something like head and shoulder formed here. You understand? So that is for people trading patterns. If you don't trade pattern, this analysis I'm telling you will have tell you early that this low high has broken, something is about to happen. So then it fake it, the market fake it But if you are already aware of the market movement, the fake will not affect you. The market fake it like the trend is going to continue, but it's fail to break this high. So if you use the strategy of the breakout of this high, you won't get fake out with that market trick. You understand? So you'll have just know that the market is about to change the trend. So guys, if you don't understand this video or you have any question, just drop it under the comment section. If you are new to this channel, please click on subscribe button. We drop different videos, different strategy on how to make money successfully in forex markets and derivative markets, and we drop free signals on our signal channels on telegrams. You can see the link is under the description of this video. You can join the channel. Also, we used to trade live on this YouTube. So every day we used to trade live both derivative and forex market. So guys, I wish you happy trading and always trade responsible. Thank you.